So, good evening and welcome. So, I think everybody knows me. So, my name's Dean Quartemaine, and I'm the course leader for accountancy up at the wonderful Sheffield College. And I'm here tonight to talk to you about everyone's favourite accounting topic, and ethics, specifically business ethics. And specifically aligned to the level 3 business awareness unit. Now, whilst ethics plays a part at level 2, most certainly plays a role at level 4, and both in your work environment, and also from if you move on to look at sort of chartered accountancy qualifications, ethics is a large part of that. But from an AAT perspective, it's mostly tested at level 3 in the business awareness exam. So we're going to look at ethics as a whole. It's mostly aligned to level 3 business awareness requirements, although there is a little bit of crossover with INAC at level 4. So there is some ethics stuff in that unit as well. So what are we going to look at? So that's what I had planned for this evening. So looking at the AAT's Code of Professional Ethics. So mastering the Code of Professional Ethics, and looking at the 5 fundamental principles that are embedded within that code. Once we've understood what the principles are, what are the threats that what are the threats against those principles? So we get a number of threats that exist within the ethical framework. So recognise both what workplace threats are and how we can implement appropriate safeguards to try and mitigate some risk. Now, they are risk, and they are risk to your compliance, and risk, as we hope maybe know, risk can't necessarily eliminate risk. Sometimes it's just, risk is inherent in everything we do, and we just try to reduce risk to acceptable levels. So we'll look at what we can do to identify the threats and how we might be able to put safeguards in place to reduce them to acceptable levels. And then we're going to look at some of the stuff that we need in the exam. So that exam success element, looking at how we strengthen our skills for the business awareness exam, and what's needed, and how we put ourselves in a position where we can pass that exam. But I guess the first thing really is, why is ethics important and why does it matter? Because the thing I get a lot of in the classroom is, well, I came here to be an accountant, I came here to deal in numbers, not in words. So why am I learning about ethics? Because it feels a little disconnected from financial statements and debits and credits. So why does it matter? Well, we have a public interest, don't we, as accountants? We hold a position of trust. So we're in receipt of an awful lot of confidential information about our clients and about the businesses we work for. And the work that we do as accountants and bookkeepers impacts investors, employees, and therefore the wider economy. So there's definitely an element of public interest there around the work that we do. And professional ethics protects our reputation. So professional ethics are not just an accountancy concept, is it? It's a concept across lots of professional industries. So if you think about, if you went to the doctors and healthcare professionals, they've got their code of professional ethics upheld by the General Medical Council. Really, professional ethics protects our reputation as a professional profession. As accountants, as I say, we're in receipt of lots of financial data, and we both have ethical policies to uphold, but there's that legal aspect of it as well. So there's the legal standing of the organisations that we're responsible to. So something like confidentiality, whilst confidentiality and keeping clients' data confidential is ethically the right thing to do, there's also a legal aspect to it as well. You know, if we were to start sharing confidential financial information about our clients, it's likely that we'd be, you know, in a court of law getting sued for inappropriate disclosure and breach of confidentiality. So while that's an ethical issue, potentially a legal issue as well. So from an AAT perspective, we have what's known as the AAT Code of Professional Ethics, yeah, or more commonly just known as the AAT Code or Code of Ethics. And it's made up of 5 fundamental principles. And we're going to go through the 5 fundamental principles, explaining what each one of those are, and then a little bit of detail around each of the fundamental principles. So the 5 fundamental principles that we've sort of highlighted in that picture on that slide there: integrity, objectivity, professional competence and due care, confidentiality, and professional behaviour. 5 fundamental principles which must be followed by all AAT members. Now, one thing that I often get asked when I'm teaching this in classrooms is, Dean, does this apply to me? Because I'm a student. I'm not a full member of AAT, so I'm not MAT or I'm not FMAT. I'm not a licensed bookkeeper. I'm not a licensed accountant. Does this apply to me? The simple answer is yes. It applies to all members of AAT and anyone that has any sort of business relationship with AAT. So any students, any members, any licensed members, either bookkeepers or accountants, have to adhere to the Code of Professional Ethics. Now, the Code of Professional Ethics, AAT, they didn't wake up one morning and write their own. It's based on the Code of Professional Ethics from this thing called IFAC, which is the International Federation of Accountants. So all of the major accountancy bodies have their own Code of Professional Ethics, which is based on the global standard, if you like, that comes from that International Federation of Accountants. And it must be followed, as I say, by all AAT members, regardless of role or level of experience. So it's not the board of AAT need to adhere to this and everyone else doesn't. It's not, if you've got 10 years experience, you need to adhere to this. It's everybody needs to adhere to the same fundamental principles. And what it does, it provides a framework for people's professional judgment. So the key thing with ethics, it's really important to understand that ethics is not a set of rules. And that's another reason why accountants don't like ethics and why students don't like studying ethics. Because students like numbers, and a calculation's right or wrong. So 2 + 2 is 4. It's not 3. It's not 5. And we like things, as accountants, we generally like things that come with certainty. That's the problem with ethics, is it's not certain. It's not a set of rules. It's a set of principles. So what we do is we tell you what the principles are, and how each person interprets those principles would be different based on fundamentally your understanding of what is right and wrong. And that's what ethics is really all about. It's about doing the right thing. So given this situation, what's the right thing to do? And if you remember that, that's really the key to ethics. So first one of our ethical principles then, integrity. So when we talk about integrity, we're talking about being straightforward and honest. And to use a textbook definition, being truthful in all professional and business relationships. So just being very truthful about, your levels of experience, about your knowledge, about what you can provide to the client. Just being straightforward and honest. Be very transparent, so not being associated with any reports or information that you believe contains false or misleading statements. So if we're upholding our integrity, we're not getting involved in anything that's involved with financial misstatements. We're not getting ourselves involved in some of that dodgy practice that we see across the industry every now and again, where people are overstating expenses, understating revenue in order to save on taxation. That's not exercising the principle of integrity. So what should you do if you're almost in this situation? So what action can you take to uphold the principle of integrity? So it's really about, if you find any errors in financial accounts, you need to raise it. And you need to ensure it's corrected. Now, sometimes you can't, you're not in control of what gets done about it, but you definitely are in control of raising it, aren't you? So you're definitely in control of saying, I am not happy here, and I'm not happy that this is a true, straightforward and honest view of what's actually happened here, and I'm not happy that these financial statements are a true and accurate reflection of reality. You can raise that. You might not be able to do too much about getting it corrected, because that might be somebody else's problem, but you can sleep at night if you've raised it. Yeah. And that's really, that's really, at the end of the day, doing the right thing for you is to raise it. At least initially. You might need to take some further action down the line if things don't get resolved in the way they should get resolved. So that's integrity. Straightforward, honest. Yeah. Overarching, doing the right thing. That's fundamentally integrity. Second of our fundamental principles is objectivity. Now, objectivity really is about being neutral. So maintaining a neutral position, not allowing any bias, conflict of interest, or the undue influence of another person to override your professional judgment. Now, some examples here of how that might not be the case in some cases. Let's say you've got your own accountancy practice, and your brother or sister has got their own business. And they come along one day and they say, will you do my self-assessment tax return? And you clearly, as a qualified accountant, nod your head and say, yeah, I'll do that. Can you guarantee that you're going to be objective? No, because objectivity is about being neutral, not allowing bias, conflict of interest, or the undue influence of another person to override your professional judgment. Now, whilst you might not allow any of that to happen, what would reasonable man on the street think? Yeah. So if you were doing your brother's accounts, for example, and he comes to you and says, well, I don't want to pay any tax, do I? I want to pay the lowest amount of tax possible. Can you now be fully objective, or will you have undue influence from another party that overrides your professional judgment? It's at least possible, isn't it? Yeah. So it is a threat. We'll look at what's one of the fundamental principles, that we'll look at the threats and how we might be able to eliminate them in a little while. Objectivity is also about fairness. So making decisions based on factual evidence rather than personal feelings. Yeah. So don't care if my brother wants to reduce his tax bill. I care about what the numbers say. Yeah. So being very objective, being very fair, and pulling the information together based on the numbers we're being presented. Another example I've got there is, and I've been through things similar to this over the years. Selecting a software provider. If you're selecting a software provider for your business, you should do it based on the technical requirements, not because the sales rep is your friend. Yeah, we see it all the time. We'd like to think we don't, but we see it all the time where sales reps will say, "Oh, you fancy going to watch the football or the cricket or the golf or some other event? Yeah. And whilst it's not necessarily meant as a bribe, how would man on the street perceive it? Yeah, a reasonable person could perceive that actually they're trying to influence your position, yeah, by offering you tickets to the football. And then you take tickets to the football, and did you give them the contract because they gave you tickets to the football or because they were the best option? And it's about just how it's perceived sometimes, yeah? So you don't want to allow any bias, conflict of interest, undue influence from anybody else. The third one, and the one that is probably the easiest one to understand in some ways, professional competence and due care. So professional competence is, do I have the skills to do the job? And due care is, well, I do now have the skills to do the job, but am I doing it properly? Yeah. So there's three elements I've got written on there. One's around skills and maintenance of your skills. So that's covered through AAT's requirement for CPD. Yeah. So professional competence comes in two parts, doesn't it? Attaining the skills, so getting the skills in the first place, and then maintaining that level of knowledge. Yeah, at the required level. So bluntly, if somebody comes to you and says, can you do a inheritance tax return? Yeah. If you're not an inheritance tax expert, you shouldn't be touching it. Yeah. Because you don't have the professional competence, do you? Yeah. I mean, I can do many things, but inheritance tax is not something that I would get involved in. I would just recommend them to somebody else. We need to be diligent around what we do, so act in accordance with the applicable technical and professional standards. So as well as having the skills, we need to obviously exercise those skills in a way that is applicable with technical and professional standards. And we need to exercise due care. So being thorough and careful. So that means don't do a 2-day job in 2 hours, because that's not being thorough and careful. Yeah. And at the heart of all of it, really, and it sounds harsh sometimes, don't do any work you're not qualified to do. Yeah. It sounds harsh because people then say, well, how do I get better? Yeah. How do I ever do that work I can't do? How do I ever? Yeah. It's about building skills. So surrounding yourself with people that can help you build those skills. Yeah. But not being responsible for something if you don't have the skills to do it. Doesn't mean you can't help with something. It doesn't mean that you can't help with a VAT return, but you're not responsible for the VAT return. Yeah.
Can I just ask a question?
Yeah.
So you're saying about like the competence and due care. So then, so as long as if you say you're not comfortable doing something, as long as you then say to somebody, I'm not comfortable doing it, but can you guide me or can you train me? Then.
Yeah, I mean, for me, it's about responsibility. So whilst you might not have, if you've never done a VAT return before, and a client comes to you and goes, can you do me VAT return? You shouldn't be saying, yes, I'll do it. What you should be saying is, well, we as a firm of accountants have done many VAT returns before. I maybe haven't done one myself, but one of my colleagues has. One of my colleagues can assist me with doing it, so I build the skills. Yeah. So first time they might do it while you watch, make some notes. Second time, you might do it while they watch and tell you what you did wrong.
Yeah.
Yeah. And you build the skills in until it becomes a hands-off task and you can just do it yourself.
Okay.
Yeah. Because that's the only way we learn. We can't have a system that says you don't know, so you can't do it. Because at what point do you know, and at which point can you do it?
Yeah.
Okay. So that was the third one. Fourth one, confidentiality. So this is where we as accountants share a lot of similarities with professional ethics in other professional settings, such as healthcare. Yeah, so in the medical world, they very much live and die on this concept of confidentiality. So you go to the doctors and you start discussing your medical history, you wouldn't expect them to be sharing it outside the doctor's surgery with anyone that's not in a healthcare setting. Yeah, so you wouldn't expect to sit in the pub, watch the football, and the doctor's talking about, all the various embarrassing medical problems that he's dealt with in the last 48 hours. You wouldn't be expecting that, would you? You know, because he has a duty to confidentiality. You as an accountant or bookkeeper also have a duty to confidentiality. Yeah, so don't disclose any information that is acquired through your professional relationships without proper authority. Yeah, so if you have explicit permission from the client, yeah, to share the information, you can do so. Yeah, but it has to be explicit permission from the client. That's not the client's wife, that's the client. Yeah, so if the client's wife rings up and says, can you tell me what Bob's earnings are for last year? Well, no, you can't, because she's not the client. Bob's the client. Yeah, it might be that she wants to know because she's getting a divorce and she wants half his money. Yeah. However, if Bob has said, and probably put it in writing, that it's okay for his wife to ring up and you to have a conversation, tell her whatever she wants to know, and he's put it in writing, then, you've got explicit permission from the client to share the information. Another really key thing, as well as the not disclosing the information, is you should not use confidential information for your personal advantage or the benefit of any third party. Now, certainly with listed companies, so PLCs, this is more commonly known as insider trading. Yeah, so as a senior finance executive, chief finance officer, or something similar in a listed company, so a PLC, you're going to have early sight of the financial results, aren't you? Before they go to market, you're going to know what they are. Yeah. So market opens at 9 o'clock. We present our financial results. What will happen? Financial results are substantially better than the market was expecting. What will happen to the share price? It'll go up. Now, what I could have done is I could have said to my wife, or could have said to my brother or my dad, or or me mate down the pub. Oh, by the way, I'm finance director at Tesco's. We're going to release our results tomorrow. It's going to be way better than everyone expects. How about you go and buy a load of shares? Yeah, buy 10 grand's worth, 20 grand's worth, 100 grand's worth, and then sell them at 10 o'clock tomorrow morning, and we'll split the profit. Yeah, that is using confidential information, because that information is not in public domain at that point. Yeah, that's confidential information for personal advantage or the benefit of a third party. Yeah, whilst it breaches ethics, and in some cases it breaches the laws around insider trading. There are some massive exceptions to confidentiality. Yeah, so information must be disclosed if there is a legal or professional duty to do so. So if you are legally obligated, yeah, to disclose the information, you're going to have to do it. The biggest reason for that would be money laundering. Yeah, so if tax authorities or HMRC or even National Crime Agency believe that one of your clients was committing money laundering, they might ask you for the financial records. You now don't have any choice. You very much have to disclose all the information you've got, whilst not telling the client. Yeah, so if you tell the client, you potentially are committing a criminal offence of tipping off. So I won't suggest that to be a good course of action. Yeah, so that's confidentiality. The fifth of the fundamental principles is professional behaviour. Now, this one is ultimately don't do anything that brings the profession into disrepute. So it's really about compliance and reputation. So compliance, comply with all relevant laws and regulations. Yeah. So just make sure you're acting, lawfully and in line with any regulations that govern your profession. And then from a reputational point of view, avoid any conduct that the accountant knows or should know might discredit the profession. So don't get involved in anything that's, a little bit dodgy, basically. Yeah. Now, 30 years ago, we didn't have this big thing called the internet and social media. Yeah. So professional behaviour extends into that social media space. So maintaining professional standards on social media, avoid misleading claims about services you offer. Yeah. Things like, I'm the best accountant in the world. Well, can you prove you are? Yeah. Professional behaviour. Don't put something on social media that you can't stand behind. Yeah. And don't put anything on social media that's going to discredit the profession. And definitely don't break the law or breach any regulations. So they're the fundamental principles. Yeah. So big reflection on all of that is, as I said earlier, ethics is knowing the difference between what you have to do. Sorry, the difference between what you have a right to do and what is right to do. So we have the right to do lots of things. Yeah, access the client's information. We don't have the right thing to do is not to go and share it with everybody. Yeah, so it's knowing the difference between what you have a right to do and what is the right thing to do. So we now understand what the 5 fundamental principles are. There's a bunch of things that threaten those principles. So what compromises ethics? And these things are probably as important as understanding what the core principles are. Yeah. So I've tried to group them into some sort of subcategories a little bit. So we've got financial and internal threats. Yeah. So from a financial and internal threats perspective, we've got 2 key threats. What's known as a self-interest threat and what's known as a self-review threat. So a self-interest threat, a threat that financial or other interest will inappropriately influence my judgment. So some examples, got one there, owning shares in a client's company. If I own shares in a client's company, I have a self-interest in them making a lot of money. Because they make a lot of money and are very successful, the value of my shares goes up. So I have a self-interest in their financial performance. Another example could be, so that's very much a accountancy practice example. If you're working in industry, you might get a bonus. Let's say you're finance director for Marks and Spencer's. If Marks and Spencer's announce profits at a certain level, you get a nice bonus. And if you're responsible for the financial statements at Marks and Spencer's, there's at least a potential self-interest threat that you will inflate profit in order to achieve a nice financial payment of a bonus. Not saying you would do that, but there is at least a theoretical threat there. Yeah? So that's a self-interest threat. A self-review threat is a threat that an accountant will not appropriately evaluate the results of a previous judgment. So in simple terms, auditing accounts you prepared yourself. So if you prepared them, yeah, when you audit them, you're just going to come to the same conclusion, aren't you? Because otherwise you're admitting you did it wrong first time. And human nature is not to admit we did it wrong. So if you're reviewing your own work, the chances are you're going to come to the same conclusion you came to the first time. So this is what's known as a self-review threat. Now, there's things we can do to eliminate these threats. So self-interest threat, just don't hold any shares in the client, don't hold any shares in clients' companies. That's probably a sensible measure to put in place there. Self-review, make sure that the person that reviews the work is not the person who did it. Yeah, so if you did the actual work and created the financial statements, make sure the internal audit bit isn't done by someone else. Intimidation threats. Now, these are the ones we see more often than we'd like to see. Some people say that this doesn't happen. I'm here to say that it probably does happen more often than we think. Yeah. Because intimidation doesn't need to be actual intimidation. Yeah, it can be perceived intimidation as well. Yeah, so what we're seeing here then is actual or perceived intimidation or pressure, including attempts to exercise undue influence over you, the accountant or bookkeeper. Yeah. They're very common in the level 3 exams, and the most common scenario is a manager's threatening your job if you don't find more profit. Yeah. So unless you do something that increases profit in the accounts, so might be change depreciation methods. Yeah. So under depreciate an asset to increase profit. Yeah. Miss out some expenses. Yeah. For example, just to increase profit. Yeah. And you're getting intimidated by your boss to do this, and they've said you're going to lose your job if you don't. Yeah. Very much intimidation. Now, could that be actual intimidation or it could just be perceived? It could be perceived that if you don't do this, there's going to be consequences. Happens more often than we'd like to think. Things you can do, which we'll come to if you're ever in that position. And there's what I've termed relationship threats. So it's what's known as an advocacy threat and a familiarity threat. So an advocacy threat, promoting a client's position to the point that objectivity is compromised. So this is you as an accountant promoting your client's shares or stock to investors, just being the spokesperson saying, look, go and put your money in here. Yeah, it's a great idea. You're promoting a client's position to the point at which you're not being objective anymore. Yeah. You just become a spokesperson and you've lost all sense of objectivity. You're probably getting paid by the client to do this. Objectivity is compromised. Familiarity threat is about you having a close relationship with the client. So close relationships that cause the accountant to be too sympathetic to the client's interest. So it could be, for example, I've got there, auditing a close family member's business. Yeah. Or, I mean, they're the major examples, but some other examples I've seen in the past is if you were auditing a particular business and you'd been auditing it for last 20 years, and each one of those audits were absolutely fine. When you come to the 21st audit, are you too familiar with that company and too familiar with what's gone before that you now get your eye off the ball? Yeah. So the 21st time, there's a load of gremlins in the accounts, but because you're too familiar with the client, yeah, you don't take due care. Yeah. So, some safeguards and mitigations. Now, I could spend all night talking about various safeguards you can put in place, but I tried to just highlight out a couple of types of safeguards and the various actions and examples that you could take. So, at a company level or a firm level, so accountancy practice level, one of the things you could do is a rotation of your senior personnel, so they don't get too familiar with the clients anymore, because you're rotating the teams, the audit teams, or even the financial accounting teams. You're rotating the personnel in those teams, the senior personnel in those teams, so they're not getting too familiar with working with one client. Put internal audits in place. Yes, that reduces all that self review issue. Yeah, so internal audits by someone else, and have a very clear conflict of interest policy. So what defines a conflict of interest in this business? Yeah, because if we have a policy, then we can say, well, that's a conflict of interest. That's not, and we can measure and monitor the conflicts of interest and mitigate them much better if we understand what the problem is. From an individual's point of view, then, so from your point of view, what can you do to safeguard and mitigate against these threats? Well, consult a mentor. Yeah, so having a mentor, someone that you can consult, certainly helps with things like professional competence and due care, because you can talk it through with a mentor rather than just jumping in and doing it yourself. Having from an individual point of view, you can disclose conflicts of interest. If you believe there's any conflicts of interest, disclosing them in the first instance is a really good thing to do. It's better to disclose it than to go through the process and then we find out we had a massive conflict of interest. And then it sounds really harsh, and it sounds like it probably wouldn't be the most sensible thing to do, but sometimes refusing the work's the answer. Yeah. Especially if you're like a sole practitioner in a practice, if you can't put adequate safeguards and mitigation in place, you should just not do the work. Now, I'm not stupid enough not to see that there is issues with not doing the work, especially if you're a sole trader, got your own accountancy practice. If you don't do the work, you don't get paid. So I'm not daft enough not to see that there's impacts to that. But the theory is that ethics is everything, and ethics is the key, and being ethically compliant is more important than the money. And then from a legal and professional perspective, so the safeguards we can put in place in terms of legal, our legal standing and professional ethics, whistleblowing procedures. So lots of businesses, very, very common in the public sector, but lots of large businesses now have whistleblowing procedures where you can blow the whistle about malpractice, at least in theory without any repercussions. It's not always quite as simple as that. And you can seek advice from AAT's technical helpline. So AAT have an ethics helpline. Yeah, you as a student or any member of AAT can call the ethics hotline and discuss, at least in a confidential manner. Yeah, not breaching confidentiality, remember. Yeah, you can discuss the ethical issue and get some advice around the best way to proceed. But remember that you must make sure that you adhere to your ethical principles when doing so, i.e. no breach of confidentiality. So how do you resolve ethical conflicts? So these 4-step process that AAT talk about, and that certainly I talk about when I deliver this to my students: gather the facts. Don't do anything until you've got all the facts. So make sure you gather all the facts. Document what the ethical issue is. and all the stakeholders that are involved in this ethical conflict. Gather all facts. Until you've done that, don't do anything else. Then look at your principles. So identify which of the 5 principles are at risk within this ethical scenario. And it sometimes might be more than one. Yeah? Understand which principles are at risk. And then an element of consultation. So consult or speak to senior colleagues or external advisors. Yeah, so you might need to speak to AAT's ethics hotline. You might need to speak to senior managers to try and resolve this conflict. Yeah? So speak to them, consult with them, get their opinions, and then you can move into that 4th step, which is around resolving it. Select the most appropriate action to resolve the conflict or withdraw yourself from the situation. Yeah. So say, I'm not prepared to do this. And sometimes that's the answer. Sometimes you can't resolve the ethical conflict. You can't resolve it, mitigate the risk, and you just need not to do it. So, for example, in a small practice, if your brother came in and said, I've just set up my own business, can you do the accounts? In a small practice, that might be a problem because you might be the only person doing the legwork. So you might have to say, I can't put adequate safeguards in place here to mitigate any perceived risk. So I'm sorry, but you'll have to go somewhere else. In a larger business, if the same thing happened, you might have multiple teams. And you might be able to say, I'll tell you what, my team can't do anything with this, but go and speak to Dave's team over there. Yeah. And Dave's team is managed by Dave. I don't have anything to do with that. So it's therefore we've mitigated all risks because I have nothing to do with it. Yeah. So sometimes you can resolve it. Sometimes you just need to withdraw from the process and say, we can't mitigate the risk to an acceptable level, so therefore we're not going to get involved in it. Right. I've been neglecting in my duties, I think, if I didn't talk a little bit about how money laundering fits in with ethics. So those ethics that we've talked about, the ethical principles, the 5 ethical principles, 5 threats, they cover a multitude of different scenarios. The whole idea is it's a set of principles, not a set of rules. You can apply it to lots and lots of different ethical situations and scenarios. Now, money laundering is somewhat different. So whilst money laundering is very much unethical, it's also illegal. Yeah. So it's covered by a number of legal acts or acts of parliament. It very much would result in potentially large fines and potentially prison time. Yeah. Now, whilst I don't want to turn it into a session on money laundering, I just want to talk a little bit about some of the key principles of money laundering. And it is not putting your money in a washing machine, which I've definitely had that before, where people think money laundering is the laundering of money through a washing machine. So there's 3 stages to money laundering. Now, it's really important, and I would suggest that if you're doing this exam, that you sort of try to commit the stuff that's on this slide to memory, because it's likely that you will get a question on what are the 3 stages of money laundering, or what are the order of the stages of money laundering. Explain what we mean by placement, explain what we mean by layering, so on and so forth. So 3 stages. So placement, that's the introduction of dirty money into a financial system. Now, that can take many forms. So that could be dirty money used to going through the till of a legitimate business. Yeah. It could be dirty money buying drugs. yeah, entering a financial system, buying some drugs, yeah. The layering aspect. So typically, what we do is we take some dirty money, we put it into. Let's say we take some dirty money, we put it into a bank account of some sort. We then go through this process of layering, which is moving the funds through a complex layer of transactions to hide its initial source. Because what we want to do is make it as difficult for them to trace where that money comes from as possible. Yeah. So we take it, put it into a financial system, spread it around a few times, put it through a few offshore bank accounts, reintegrate it, mess about with it, layer it thousands and thousands of times. Well, hundreds of times, probably. Yeah. And then once we've done that, once we've layered it as many times as we decide we want to, we're then going to reintroduce it back into the economy as what is perceived to be clean money. Yeah. So we then take it out of what is a legitimate financial system and use it to buy something that looks quite clean. So we might buy a car, we might buy, a house, we might buy something that looks, at least on the face of it, legitimate. Yeah, so that's integrating dirty money back into clean economy. Yeah, 3 stages of money laundering. So I've got a bit of a scenario here then. So an employer asks you to capitalise a large repair expense to boost profits for a bank loan application. Yeah, and they remind you that your bonus depends on doing it. Now, this is not money laundering. This is very much a clear breach, potentially, of ethical principles. So if this happened, yeah, and I can imagine there are businesses where this happens quite a lot. Yeah, capitalise that expense. The repair expense should be a revenue expenditure, not capitalised. It's not capital expenditure. Yeah, but they're asking you to do that to boost profits, so we can get a bank loan through. And they've told you that if you don't do it, your bonus is going to. Well, your bonus depends on us getting this loan. So the first couple of key questions I think we want to be asking ourselves in this scenario, yeah, is which principle is threatened? So I think we've got two. I think we're not being straightforward and honest, are we? So I think our integrity is at risk here. So we've got threatening our integrity because we're not going to be honest. We're not going to do the right thing. And our objectivity is starting to be questioned. We're not going to be objective because we've got the self-review, self-interest threat. Yeah. So the principle is objectivity, but it's threatened by our self-interest, which is what the next bit will be. Yeah. So what threat type? Well, we've got intimidation because he's told us your bonus depends on it. He's intimidating us to do the right thing. Well, intimidating us to do the wrong thing. Sorry. Yeah. He's asking us to capitalise it. If we don't do it, you're not getting a bonus. That's a level of intimidation. So intimidation to our integrity. So we're not going to exercise proper integrity because we're being intimidated. We're not going to be objective because we're very much looking after potentially our own self-interest. So our self-interest is to get that bonus. We've been working all year for this bonus. Yeah. Our self-interest then is to do what we need to do to get the bonus. But then by doing that, we're not being objective. And then what's your next move? So what would you do? Well, I think I would say no, sorry, not doing it. And at least in the first instance, no, sorry, not doing it. And then I think it depends on who's asking you as to what your next course of action would be. So if it was, let's say you're a junior member staff and it's somebody in sort of middle management asking you to do it, you might say, no, not doing it. and go to the next level up and say, I'm being asked to do this. I don't sit right with me. What's your view? Ultimately, you shouldn't do it. Not necessarily the answer, but don't do it yourself. I wouldn't do it. So if I got asked to capitalise it, I'd say no, I'm not doing it. If you want it capitalising, you can do it yourself. Because at least that's not necessarily still the right thing to do, because the right thing to do is for it not to be done at all. Yeah. Because if you're aware it's done, then still, we're still potentially we're almost in fraud territory, aren't you? Yeah, because you're overstating profit. Yeah, but it's about how far you want to take it. I think I would definitely raise it with the next level of management. Say, do you realise what the consequences of this are? Maybe take some advice from AAT. But yeah, certainly the next move, you gather all the facts, of what you've been asked to do. Yeah, go through that 4-step process that I talked about earlier. So get all the facts. Yeah, look at what principles have been potentially being threatened. Yeah, consult with some people. So speak to senior management, potentially externally, and then try and resolve the situation. So what's the most appropriate way to resolve it? And it might be that you just withdraw from the situation, don't do it. Yeah, which you're not going to do it, are you? You're not going to capitalise a cost that shouldn't be capitalised. So one thing that's really important with ethics is it's about understanding your own professional judgment. Yeah. Now, one thing that AAT's assessment guidance talks about in relation to the business awareness exam is that precision in terminology is the thing they're really looking for. So it's essential that we have precision in the terminology we use. So this is a threat to our objectivity. Yeah. Identifying the threat as professional behaviour when it's clearly objectivity would lose marks. So we need to be very precise in understanding what type of threat we've got. Yeah, so it's worth just taking that step back, rereading the question 2, 3, 4 times to understand exactly what type of threat we've got. Yeah. Some key tips I've got then. These are on the basis of quite a number of attempts of people sitting this exam. So I probably taught maybe 300 or 400 people through this exam. Make sure you name the principles. Be very specific. Don't say things like it's bad. Yeah. Say things like it threatens objectivity. It threatens professional competence. Yeah. Be more specific than it's bad. Don't do it. Yeah. Because whilst that's true, we want more detail than that. Identify what the threat is and use AAT specific categories. So familiarity, self-review, self-interest. They're the threats. Identify what the threats are. And then suggest some safeguards. Always provide a practical solution. Yeah. Now remember, there's no right and wrong answer necessarily in terms of your safeguards, because it's about what you would do in the situation, but it's about you being able to justify it. Yeah. So I would go and talk to my boss about it, or I would go and talk to his boss about it, or I would ring AAT and get some professional advice. All of that, as long as you can justify why you take that decision, it's not necessarily wrong, is it? Yeah. Okay, so that was a bit of a whistle-stop tour through professional ethics. Hopefully I've not sent anyone to sleep. Does anyone have any questions?
The only thing I'll say is for more information on money laundering, there is so much on the AAT website.
Yeah.
Absolutely loads.
There's a lot of really good content out there around money laundering. Good.uk website, there's plenty of stuff on there. Believe it or not, things like the BBC News website, there's a lot of stuff on there about money laundering, like fairly recent cases.
Yeah.
So certainly when I teach money laundering as a concept in the classroom, I try to pick up all the sort of recent cases, big recent cases of money laundering. I think being able to connect what you see and read in the news against some of the theories that you learn in the classroom really helps.